If you were born before 1963, I want you to stop what you are doing right now and listen to me very carefully. The Social Security Administration is sitting on a check with your name on it. Most retirees walk right past it and never even know it is there. That check can be worth up to $22,080. And today I am going to walk you through the 3 IRS forms that put that money back in your mailbox. I am talking about forms the Social Security Office handles every single day for people your age. Forms like Form SSA-521, Form SSA-24, and a tax credit on Schedule R. You do not need a lawyer. You do not need a tax professional. You just need to know which door to knock on. Stick with me for the next few minutes, and I will show you exactly where to go, what to say, and what to write on the page. Now let me give you a quick promise before we get into the details. By the end of this video, you will know the one IRS form that older Americans forget to claim every single year. You will know the dollar amount the Social Security Administration will hand you if you file the right paperwork. You will know the legal loophole buried deep in the tax code that turns a missed credit into actual cash in your bank account. And you will know the free government program that will help you fill out every page for $0 out of your pocket. None of this is a scam. None of this is a trick. This is money the government already says you deserve. It just sits there until you ask for it. So please stay with me because the part that matters most comes about halfway through. Before we go any further, let me share a quick story so you can see what this really looks like in real life. A woman named Ruth from Ohio turned 66 in March. She had been drawing Social Security since she was 62 because she thought that was the smart move. Nobody told her she could have waited and earned thousands more. When she finally called the Social Security office and asked about retroactive benefits based on her full retirement age, the agent did something Ruth did not expect. He pulled up her record, found an error in her earnings report, and told her she was owed 6 months of back pay. 6 months at her monthly rate came out to more than $11,000. Ruth had no idea. She almost cried on the phone. That is what we are chasing today. That moment where the government opens the file and tells you that yes, there really is money waiting for you. If you have been collecting a check for years and never asked, you owe it to yourself to keep watching. If you have ever wondered whether the IRS really sends money back to retirees, the answer is yes, all the time. The IRS works hand in hand with the Social Security Administration on programs designed for Americans over the age of 65. There is a special senior tax return called Form 1040-SR. There is a credit for the elderly called Schedule R that can be worth up to $5,250. There is a senior bonus deduction worth up to $6,000 for single filers and $12,000 for married couples in some tax years. There is the earned income tax credit that is still available to older workers and seniors who earn a small paycheck. And there is the standard deduction add-on for age 65 and older that hits about $1,950 for single filers this year on top of the regular standard deduction. The tax code is full of these little gifts for retirees. The only problem is that nobody ever opens the gift box for you. Now let me be very honest with you for the next 30 seconds. I am not a lawyer. I am not a CPA. I am a tax researcher who has spent over a decade reading IRS publications line by line. I cannot give you personal tax advice. I cannot see your specific return, but I can show you the rules the IRS has written in plain English. Everything I share today is grounded in IRS publications like Publication 524 for the credit for the elderly and Publication 554 for senior tax highlights. I will reference real form numbers, real dollar amounts, and real agency names. If anything I say conflicts with your personal situation, please call the IRS directly at 800-829-1040 or visit your local Social Security office. They will look at your record for free and tell you exactly what you qualify for. Never trust a stranger on YouTube over your own government. Here is something most retirees do not realize, and it is the key to everything we will discuss. The IRS and the Social Security Administration share one giant database of every dollar you have ever earned. When you file a tax return, those earnings get reported back to Social Security. When you draw Social Security, those payments get reported to the IRS on a form called Form 1099-R. So the two agencies already know what they owe you. They have known for years. The only reason the money does not arrive in your mailbox is because the right form did not arrive at the right desk. That is the whole game. Your job is to put the right form on the right desk, and I am about to show you which form goes where. Now here is the part nobody talks about, so listen carefully. Most financial advisors skip over the Schedule R credit because it only applies to people who are 65 or older, or who are retired on disability. Most of their clients are not 65 yet, so they never bother to learn it. That means the credit sits in the tax code like a quiet little secret waiting for retirees to discover it. Schedule R is officially called the credit for the elderly and the permanently and totally disabled. For the 2024 tax year, which most of you filed by April 15th of 2025, the maximum Schedule R credit is $5,250. For the 2025 tax year filed by April 15th of 2026, the maximum credit stays around $5,250 with inflation numbers locked in by the IRS. This credit is a real dollar-for-dollar reduction of your tax bill. If you owe the IRS $2,000 and you qualify for Schedule R, the government will literally send you a refund check or reduce what you owe. Yes, it really works that way. Let me walk you through who actually qualifies for Schedule R because this is where retirees get confused. To claim Schedule R, you must be 65 or older at the end of the tax year, or you must be under 65 and retired on permanent and total disability with taxable disability income. Your adjusted gross income must fall under a certain threshold. For 2024, the limit for single filers is $17,250 in adjusted gross income before the credit begins to phase out. For married couples filing jointly, where both spouses qualify, the limit is $25,000. The credit fully phases out at higher income levels, but lots of retirees on fixed income qualify without even trying. If your only income is Social Security and a small pension, you almost certainly qualify. That includes millions of people watching this right now, and most of them never even check the box on Form 1040-SR. Let me stop for a minute because I want you to do something right now while you are watching this video. Pause this video if you need to. Pull out your most recent tax return. Look for line 6 where your adjusted gross income is listed. If that number is below $17,250 and you are single, write a big check mark next to Schedule R on Form 1040-SR. If you are married and the number is below $25,000, do the same. That single check mark could mean up to $5,250 back in your pocket. Now, if you did not claim Schedule R on last year's return, you can still fix that. File Form 1040-X, which is the amended U.S. individual income tax return. The IRS allows you to amend the last 3 tax years. So if you missed Schedule R in 2022, 2023, or 2024, you can still go back and grab that money. The form is free. The math is simple. The check will arrive by mail. Now let me give you a quick example of how this works in real life with real numbers. Imagine a 67-year-old widow named Mary. She lives alone in Tennessee. She draws $1,650 a month from Social Security. She has a tiny pension of $400 a month. Her adjusted gross income last year was about $24,600. She filed her tax return on Form 1040-SR, but she never claimed Schedule R because her tax preparer did not mention it. When she amends her return on Form 1040-X and adds Schedule R, she ends up with a $1,580 refund check from the IRS. That money came straight back to her because the credit was sitting there waiting to be claimed. Mary is not a special case. Her story is the story of millions of retirees across the country. The IRS even publishes this in their official instructions for Schedule R. It is just that few people ever read them. Now let me introduce the second hidden benefit, and this one has a dollar number that may surprise you. The senior bonus deduction is a special add-on for taxpayers who are 65 or older. For the 2025 tax year, single filers get an extra deduction boost on top of the regular standard deduction, and married couples filing jointly get up to $12,000 if both spouses qualify. This is on top of the 2025 standard deduction of $15,750 for singles and $30,700 for married couples. So a married couple both over 65 could be looking at a combined deduction of well over $32,000 in 2025 alone. The IRS treats older Americans more generously than younger taxpayers through the additional standard deduction for the aged. They want you to keep more of your income out of the taxable bucket. They just do not send you a flyer telling you about it. Now I want to talk directly to the comfortable retiree for a moment. Maybe your Social Security is over $3,000 a month. Maybe you have a pension. Maybe you have a healthy IRA. You might be thinking this video is not for you. Please stay with me because the senior standard deduction bonus and Schedule R can still apply to you under specific conditions. Even if you do not qualify for the full credit, even a partial Schedule R can save you a few $100s. And if your previous tax preparer skipped the right line on Schedule 3, you can amend that too. A higher income retiree can still walk away with a real refund if the paperwork was filled out wrong the first time. So this is not just a low-income video. Anyone watching who is 65 or older should go back and double-check the last 3 years of returns. Now let me talk to the lower-income senior who is living on a tight budget. If your only income is Social Security and a small part-time job, you may qualify for the Earned Income Tax Credit. The age cap on the EITC was removed years ago, which means seniors can now claim it if they are still working even a few hours a week. For 2024, the maximum EITC for a single person with no qualifying children is $632, and for 3 or more qualifying children, it rises to $7,830. For 2025, the maximum EITC for a single person with no children rises to $649, and for 3 or more children, it rises to just over $8,046. That is real money that gets directly deposited into your checking account when you file your return. The IRS pays this even if you owe no tax. You also may qualify for the Savers Credit on Form 8880 if you put a small amount into a retirement account at work, even if that work is only part-time. Now let me explain the catch because I respect you enough to tell you the truth up front. The Schedule R credit has an income phase-out. Once your adjusted gross income climbs above the threshold, the credit shrinks. A single 65-year-old with adjusted gross income of $25,000 will get a much smaller Schedule R credit than a single 65-year-old with adjusted gross income of $10,000. The income limits also change based on whether you file as single, married filing jointly, or head of household. There is also a rule that says your credit cannot be larger than the tax you actually owe before the credit. So if your tax bill is already zero because of deductions, you need a small tax liability for Schedule R to take effect. This is why many retirees file Schedule R together with Schedule 3 to make sure the credit can take hold. The instructions on the form walk you through this carefully. Now let me explain the catch on retroactive Social Security benefits, because this part is just as important. When you first apply for Social Security retirement benefits, the Social Security Administration can only pay you up to 6 months of retroactive benefits. That is the law. So if you waited to file, but you were actually eligible 6 months ago, they will pay you those 6 months in one lump sum check. If your monthly benefit at full retirement age is $1,840, then 6 months of back pay equals $11,040. But here is the catch. You have to ask for it. The Social Security Administration does not volunteer it. Most retirees walk in, fill out the application, and walk out without ever saying the words retroactive benefits. So they leave that money sitting on the table for the rest of their life. Let me also share the second Social Security rule that involves Form SSA-521, the request for withdrawal of application. This form only works within the first 12 months of starting your benefits, but it is one of the most powerful tools the SSA offers. If you started Social Security too early and you now regret it, you can withdraw your application, repay every dollar you already received, and then reapply at a higher monthly amount. A person who started at 62 and withdraws at 67 can see their monthly check jump by hundreds of dollars for the rest of their life. When you multiply that across 20 or 30 years of retirement, the total lifetime gain can easily reach 6 figures. This is a real legal loophole. It is written right into the Social Security rules, and millions of dollars go unclaimed every single year. Now let me share the third Social Security rule that involves Form SSA-24, the statement regarding survivors' benefits. If your spouse passed away and you did not claim survivor benefits when you could have, the Social Security Administration can pay you up to 6 months of retroactive survivor benefits in one lump sum. A 65-year-old widow whose husband was earning $2,400 a month could be owed around $14,400 just for the missed survivor benefits plus the older spouse's earnings record. Add in Schedule R for the elderly, the senior bonus deduction, the standard deduction add-on, retroactive retirement benefits, and survivor benefits all at once, and the total payout crosses $22,080 for many retirees. That is the number we are chasing. That is the check sitting in your file at the local Social Security office right now. Now let me walk you through how you actually take action on all of this. The free path is simple and designed for you. First, you call your local Social Security office using the office locator on the Social Security website and ask them to apply for retirement benefits or survivor benefits. You do not need an appointment in many cases, but if you do, you can schedule one online through the My Social Security account. Second, when the agent asks when you want your benefits to start, choose the earliest possible date that is within 6 months. That choice alone can put thousands of dollars in your first check. Third, if you started benefits too early and you are still within 12 months, ask for Form SSA-521 and start the withdrawal process. Fourth, when you file your tax return on Form 1040-SR, attach Schedule R and check your adjusted gross income against the limits I gave you. Now let me show you the free help that is available right now, and it costs you absolutely nothing. The IRS runs a program called VITA, which stands for Volunteer Income Tax Assistance. VITA is staffed by IRS-trained volunteers who will prepare your tax return for free if your household income is under about $67,000 a year. There is another IRS program called TCE, which stands for Tax Counseling for the Elderly. TCE specializes in the exact tax issues we are discussing today. Schedule R, the Senior Standard Deduction, Form 1040-SR, and amended returns on Form 1040-X. AARP Tax Aid is the largest free tax help program in the country for people over 50, and they will sit down with you in person, walk you through every line, and e-file your return at no cost. You can find all of these programs by visiting the IRS Free File section or by calling the AARP Tax Aid hotline. The help is local, friendly, and free. Let me give you the exact 5-minute action plan so you can start collecting your money today. Step 1. Grab a piece of paper or open the Notes app on your phone. Write down 3 form numbers: Schedule R, Form 1040-X, and Form SSA-521. Step 2. Find your most recent tax return and locate your adjusted gross income. Compare that number to $17,250 single or $25,000 married filing jointly. Step 3. If your AGI is below those numbers, you very likely qualify to amend last year's tax return using Form 1040-X with Schedule R attached. Step 4. Call your local Social Security office using the office locator on the Social Security website and ask about retroactive benefits if you have not yet filed, or ask about Form SSA-521 if you started benefits too early within the past 12 months. Step 5. Take your tax return to a free VITA site, a free TCE site, or an AARP tax aid location near you. Let them help you for free. Now I want to ask you a quick favor before we wrap up this part. Hit the subscribe button right now if this video is helping you. My channel is completely free. I bring you a new hidden tax benefit every single week, and I do not charge you a single penny for any of it. I do not sell your data. I do not push financial products. I just dig through the tax code so you do not have to. If you are subscribed and the bell is turned on, you will see the next video the moment it goes live. Make sure you are subscribed before we go any further, because the next video is going to cover a brand new IRS rule that lets millions of retirees over 65 write off thousands of dollars in medical expenses they already paid for out of pocket. That medical deduction by itself can be worth up to $15,000 if you know how to claim it. You do not want to miss it. Now let me ask you another favor. And this one might be the most important thing I say today. If you know somebody who is over 60 and still has not started their Social Security, please send them this video right now. A quick text message is all it takes. A share on your family group chat. A forward to your neighbor down the street. You will probably change their retirement for the better by doing so. The IRS estimates that more than $1.4 billion in tax credits and refunds go unclaimed by seniors every single year. Most of that money belongs to people who simply did not know about the form they needed to file. By sharing this video, you put that money back where it belongs, into the pockets of the people who earned it through decades of work. Now let me give you the recap and the single most important action step you need to take before you close this video. The single most important action step is to amend last year's tax return using Form 1040-X and attach Schedule R. That is the move that sends thousands of dollars back to your mailbox. The second most important action step is to call the Social Security Administration and ask about retroactive benefits if you have not yet filed, or to ask about Form SSA-521 if you started benefits too early within the past 12 months. The third most important action step is to make sure you are using Form 1040-SR for every tax return from now on, because that return is specifically built for older taxpayers and it makes the senior-friendly deductions easier to spot. 3 steps, 3 forms, 1 refund check in the mail. That is the entire plan. Now, before I close out, I want to be transparent with you one more time. I am a tax researcher, not a financial advisor. I cannot look at your specific tax return. I cannot guarantee that every viewer will qualify for every benefit I described. The numbers I shared are based on the IRS forms and instructions that are publicly available on the official IRS website. If your situation is complicated, please reach out to a VITA volunteer, a TCE counselor, or an AARP tax aid site near you. Those services are free, trusted, and IRS certified. They will sit down with you and look at your actual return and tell you exactly what you are owed. That is the smartest next step for any retiree watching this right now, and I cannot recommend it enough. Now let me drop one more hidden benefit for those of you still with me. The IRS lets you exclude a portion of your Social Security from federal income tax using the calculation on the worksheet in the Form 1040-SR instructions. For most retirees with low other income, up to 85% of Social Security remains tax-free in practice because the standard deduction wipes out the taxable portion. This is why the IRS built Form 1040-SR in the first place. It is the friendliest form the IRS has ever released, yet many retirees still file the regular Form 1040 and miss the senior-friendly layout entirely. If you have been using the regular Form 1040, switching to Form 1040-SR for next year is a free upgrade you can take advantage of immediately. If this video helped you, please drop a comment below telling me what year you plan to amend. I read every single comment, and I want to know how many of you are going to take action. Tell me whether you have already called the Social Security office or whether you are going to call this week. Tell me whether you have used VITA or AARP tax aid before, or whether this will be your first time. Your stories help other viewers feel brave enough to do the same. Most importantly, tell me your biggest challenge. Is it the math? Is it finding the forms? Is it just getting up the nerve to call the IRS? Whatever it is, I want to help you push through it in the next video. Drop that comment now before you click away. Thank you so much for staying with me all the way to the end. You just spent the last few minutes learning something that most retirees never learn in their entire life. You learned that there are 3 forms sitting in your future that can refund you thousands of dollars. You learned that the IRS and the Social Security Administration already know what they owe you. They are just waiting for you to ask. So go ask, make the phone call, print the form, walk into the VITA site, bring your most recent tax return and your Social Security statement. Let the volunteers help you amend your return and claim your refund. The check will come in the mail. I promise you it will. And I will see you in the very next video where we will talk about how to write off up to $15,000 in medical expenses on your senior tax return. Stay safe, take your time, and God bless.